Time for the local business spotlight on City News 570.
And we are joined this morning by Faisal Susiwala, broker of record with RE/MAX Twin City, Faisal Susiwala Realty. Faisal, good morning.
Good morning, Mike. How are you?
I'm doing well, thank you. How about yourself?
I'm great, thank you.
Excellent. Let's take a look back at the first quarter of this year in the real estate market. What were we seeing in that first quarter, and what are you seeing now?
Well, we've seen fantastic growth in the selling price of homes. Unfortunately, we're not seeing a lot of inventory, but we are up 12% in the first quarter on the average price of a home in our region. That's a welcome increase, especially after the 35 to 38% decline we saw from the highs of last year in February and March. And we're going to, I think, continue seeing a little bit more of an incline or appreciation in values moving through the summer. And most likely we'll see a slowing down in the fall market.
Something I've been hearing more and more about, Faisal, is that amortization on mortgages could be extended beyond 25 years for home buyers. What are some of the pros and cons of this approach?
Well, there was a proposal which CMHC has declined in theory that they don't want to see 30-year amortizations in the market or even longer amortizations. They want to limit it to 25 years. The benefit is that it will allow people to get into the market that may not be able to afford based on a 25-year amortization payment. And, of course, if it's a 30 or 35-year amortization, the payment decreases significantly. But people are buying homes with interest-only mortgages, private lenders, which really minimizes their costs. So there's always options around that. The fear is that if the amortization is extended, that it will create higher demand, and we don't have the supply to meet those demands.
One of the other things that we keep talking about impacting the real estate market is, of course, inflation. Where is it at now, and how is this impacting real estate, Faisal?
Well, the numbers, I think, are going to come out tomorrow, but right now as we stand, we're on target for inflation to be at 4%, and we're finding that interest rates are kind of matching where the inflation rate is at. I don't know if that's on purpose or not, but it seems to be the trend right now, and we're seeing a lot of pressure on the interest rates to go down. Banks are opening up. They're being a little bit more lenient and accepting applicants and giving out money again, which they had really stopped doing, and people were looking at alternative options, but I think they can go back to the big banks and start borrowing money again, and they're a little bit more welcoming now than they were a few months ago.
Ontario's greenbelt kind of made its way back into the news last week with Ontario Premier Doug Ford being questioned about opening up parts of that greenbelt for development. What are your thoughts on supply, demand, and the greenbelt being made available for more homes?
You know, it's interesting. I don't always agree with Doug Ford's policies, but in this case, I do agree. Yes, they're going to remove 7,400 acres from protected greenbelt, but they're going to add another 9,400. So the effective analysis here is that we're increasing 2,000 acres of greenbelt land. It doesn't need to be concentrated in city centers where the demand is high. When you have, 500,000 people coming into Ontario, and we've extended the greenbelt close to the city boundaries, it takes away the ability to develop in those areas. So by, give and take is important. We have this not in my backyard mentality, and that's a real problem. You can't complain on one hand that we need affordable housing and we need more housing, and on the other hand, you're saying, but don't build it in my backyard. So you have to sort of take a route here, pick a lane, and stay in that lane. I think that creating more housing in the greenbelt areas is a good thing, provided that we're increasing it in other areas.
And just before I let you go, investing in real estate. Is real estate still a good investment compared to the stock market, for example?
Well, real estate investment is a great opportunity, and that might be a self-serving statement, but I believe it is because it's inflation-proof in the sense that you can't print more land. You can't print like you can print money. Gold is another area that you can't print gold. So, when you look at the opportunities and the appreciation in long term, I think real estate is still the best investment vehicle. I know there's a lot of pressure from the government to stop real estate as being an investment vehicle, but you have to remember that if investors pull out of the real estate market, we're not going to have rental housing available. So there's a lot of balancing that has to be done here. But yes, I believe investment in real estate is still a prime place to put your money.
Faisal, always good to chat with you. Thanks for being on the show.
Thanks for having me on. Take care.
Faisal Susiwala, broker of record with RE/MAX Twin City. Faisal Susiwala Realty.
The local business spotlight, where your business comes first on City News 570.